Hey traders, welcome back. I felt like the weekend was a long one and I haven't traded in 2 weeks, but here we are and we're going to go over some pre-market analysis. And well, let's first talk about real quick news. So Trump had G20 and the expectation was he was going to be pretty dovish when it came to China and easing tariff tensions, and that pretty much happened for the most part. They didn't really get closer to a deal, but they seemed like they were more bullish on getting a deal done, yada yada yada. You can see here the expectation at the close, you saw a bunch of short squeezes, and now you have a huge gap up. I mean, we gapped up big. So look, I personally hate these types of markets because now we're going to have tension that's going to go way higher. It's going to be way extended. We're going to have expansion bars all the way down here. We're going to have a huge gap up, and this market just isn't going to be very organic. And if you can follow me for any amount of time, you know I like organic trading markets. I don't like news bombs, because here's what's going to happen. We could see some more short squeezes at the open and go up another 10 points, 15 points. Or there just could be a bunch of people going, you know what, I'm not going to buy this. I'm not buying all the way up here. And they can just let the market melt all the way down. And look, there was a lot of targets on the way down here, all the way down to 29.40 where the short squeeze stopped. They might bring it to the gap at 29.55. Either way, it's just, I hate these types of markets. So, for me personally, I'm not going to look to trade it. It's just not look, some people can trade this type of market. I just don't. But know that we are bullish. We are bullish. The tension's going to stay well above zero. It would take a monumental effort just to get close to testing zero on the primary tension, which is this line here. It would take another monumental effort to get daily tension back down to zero. So at the very least, we're looking at a 2-day period where the bulls are just going to have complete control. But the problem we're going to have is 4th of July. We're also going to have the Fed speak coming up soon. And look at this. The bulls have just been dominating for the past week and a half, 2 weeks. And typically when you get that type of domination and the bull trend is super extended, and you just don't really see a lot of momentum during the cash days, and it gets very difficult to trade. So look, but we are bullish, and the context is bullish, the structure is bullish, and you just have to keep that in mind when you start placing trades. If you do go short, the expectation is that it's going to be a range trade. It's not something you want to hang on to. If you go long, you got to understand that, it's going to be a sloppy, choppy long that you might have to wait a few hours before it goes in your trade just for a range. So, like I said, I don't like these markets. Good luck trading. We'll be here all week, and we'll see you in the room.